With the next 60 minutes.
But first, let's invite the big corporate on Trading Hour today. Amit Agarwal, the Group CFO of Raymond, is joining us on the show now. Amit, morning, and thanks so much for joining in. Before I get to the demand trends, etc., and the kind of benefit that you are seeing from the wedding season, we had a guest early in the morning who indicated that broadly for the BSE 500 companies, we've seen the cash flows come under stress in the quarter gone by. And the worry in the market is that if that's a trend which continues, that perhaps capex will slow down. We could see some moderation in the expansion plans. So could you tell us, for Raymond, what are the expansion plans? Is it on track? Or do you think there is scope for you to accelerate on that? Some numbers, sir.
Sure. No, I think, thank you for having me. I think it is a decent journey for us, as you have seen that even in the second quarter, which we just reported, where we have been able to generate cash, though there is a buildup of inventory and receivable, but we still got a free cash flow, which helped us to reduce a small debt. And we are completely on track for our capex expansion. And for me, the capex expansion is big on the China Plus One, where we have a garmenting export. We are adding significant number of lines, close to 20 lines we plan to add over the next 18 months for exporting our products to the big names, big retailers outside India, be it in Europe or in Americas. So that's very much clearly on the plan. As far as our engineering business is concerned, as we talked about, we continue to grow our capacity there and in order to service to the market, because almost 50% is the domestic market and 50% is the export market. And in the domestic market, when we are focused on the auto components, which is doing extremely well for us, has helped us to actually accelerate a little bit of our capex expansion.
All right. Hi, Amit. Good morning and thanks for joining us. This is Pavitra. If you could, give us a sense of how the wedding season demand is really looking. We're getting into that December period when you see a lot of weddings. So how is that looking? And also in Q2, we did see that your average ticket size went up quite a lot. It was around 25% higher. Is this a trend that we could see in Q3, Q4 as well?
Yeah, actually, that wedding season, we track it very closely. We know exactly how many number of days of weddings are there. For example, in this quarter, third quarter, we are seeing almost like 32 lakh weddings going to happen with almost like 19 days of wedding. And actually that we saw the trend coming right in the month of August when we do the bookings. So July and August, we had dispatched all our goods because you needed to have the material stocked at the various retail counter at our franchisee shops so that people can buy. And that is where we saw the trend that almost 26% has been the average ticket value grown compared to the pre-COVID level. So clearly you have seen a K-curve recovery where people who want to come really want to spend big and want to make a good kind of collections for themselves. And it is not just limited to the suits. We are also into the ethnics category, and we are seeing a good traction on our ethnics category as
Amit,
well.
I'm saying, since you're saying that obviously this quarter is so heavy on weddings and you have, this kind of orders, what is the revenue likely to look like for Q3?
So I won't be giving a guidance, but as I said, this whole year for us is going to be a record in terms of the revenue and in terms of the profitability. You have seen the demonstrated performance in the second quarter, which is practically made available for the third quarter sales at the retail counters.
Okay, but you're saying that all the goods which are required for this wedding season, 32 lakh wedding season spread over 19 days, is dispatched in August and September. So the bulk of the benefit is already played out, right?
Yeah, some you will get because you are expecting also the fourth quarter, which is also a very strong quarter. You are seeing 47 days of wedding. And that is some of the material we have dispatched in the month of October as well as early November.
Q3 revenues be better than Q2?
I won't be giving a guidance, as I said.
Okay. At least then directionally, if you could tell us, will it be better or worse? And even the average ticket price, which, as you said, in the first half has gone up by 26%. Has it gone up even further?
Average ticket value will be higher in this quarter as well. That is for sure, because as you see, people are coming, and as well as the NRI weddings, which were not happening in the past, had not been happening because of the COVID. This year, we are expecting a large number of NRI weddings, which would increase the average ticket value as well.
All right, got that. Amit, last time we spoke, you said that footfalls are not quite back to pre-COVID levels. Where do they stand now? Do you think in this, since we're talking about wedding season demand, do you think that has seen a pickup as well? So if you could take us through that.
Yeah, I think the footfalls are reaching close to pre-COVID levels. You would not say exactly it has hit the same level of pre-COVID, but it is largely offsetted because of the average ticket value. That has helped us to improve our revenue.
Do you have Black Friday sales, Amit, across your business EBOs?
We do, but actually, the advantage at this is over the weekends, we especially get a large number of sales. So at our TRS stores, we have been clocking the revenue, which is one of the highest over the last weekend. And not only this weekend, even the previous weekends, the last 3 weekends, we have seen one of the highest sales at our franchisee store, which we monitor on a day-to-day basis.
Okay, for the benefit of our viewers, TRS is the Raymond, store.
Sure.
Yeah, go ahead.
All right. Also, Amit, what is the store addition plan looking like? I think you added around 25 in the first half of the year. Can you tell us what it's looking like for the second half?
Sure. No, absolutely. I think as we talked about the ethnics, we are launching in a big way. So we are close to expansion of 80 to 85 stores. By the end of the year, we would have added in the whole year. So another 60 to 65 stores we will add during the remaining period of this year. And that is going to be in most of the tier 1, 2, and 3 cities. And that will help us to brand our image on the branded ethnics products.
So store addition plans are made well in advance, right? So if you could tell us what are the store addition plans for FY24 as well as FY25, I'm sorry?
Yeah, so actually we are planning to add almost 100 to 125 stores every year in the next 2 to 3 years. Every year, by the end of 3 years, I think we should be reaching close to 2,000 stores from a current 1,400 stores.
Okay, and you are saying that, a lot of it is because of the ethnic segment as well. I know that you do have a target of reaching 10 to 15% market share in this segment. Where is it currently for the ethnics category?
So at this juncture, it is a building up, and the way we are looking at it is there will be a significant move from an unorganized sector to an organized sector, which we will participate. And let us also understand that we are present in 600 cities with our The Raymond shop and the dealer network. So they are also having shop-in-shop stores for the ethnics, which will enable us to garner the market share, which we envisage over the 3-year period.
This 100 to 125 of store addition that you've planned now for the next 2 or 3 years now, is this in line with what you've done, say, pre-COVID, or can we consider this an acceleration?
This is an acceleration, completely an acceleration, because we are seeing a lot of opportunity in this, both with our branded products like the Color Plus, Raymond Ready to Wear, and Park Avenue. So we are not just restricting the store openings only to ethnics, but also on the Park Avenue, Raymond Ready to Wear, and the Color Plus brands.
What were the annual store additions pre-COVID on an average?
So annually, we would have added anything between 60 to 65 stores, and that is what we are doubling now.
All right, Amit, we'll leave it at that today. Thank you very much for joining us and taking us through your outlook for what is likely to be a very strong quarter for you owing to the wedding season. So like he said, actually FY23 is going to be a record-breaking year in terms of revenue, and they have a solid store addition plan as well. That is the management of Raymond. Stock is up just around 0.7% today, but it has done well. By the way, take a look at the market. The Sensex did hit its lifetime high, so 62,500. The Sensex has hit that level. The Nifty is just around 40 points away, so keep all eyes on that because we're tracking that closely currently at 18,564. So we're just around 3940 points away from the all-time highs. With that, we're going to get into a short break now, but when we come back, there's lots more market action in just a bit.